Welcome to the Public Accounts Committee on Thursday, the 6th of March 2025. In 2023-4, the UK tax system raised £829 billion, which pays for our public services. The process of collecting this tax came at a price tag of £4.3 billion, and this cost is increasing partly as a result of the rising complexity in different tax regimes and taxpayer numbers, but there are other factors too. HMRC's stated aim is to run a tax system that is the simplest, most customer-focused and efficient way. However, our committee's recent survey of HMRC's customer service revealed that delivering effective customer service continued to be a challenge for HMRC. We've also recently examined the issue of tax evasion in the retail sector, with the committee finding that the true cost of the tax evasion is likely to be vastly underestimated by HMRC thanks to the loopholes in the current system. So today we'll be continuing our scrutiny of HMRC by examining the main administrative costs in the UK tax system. We will be assessing the main cost pressures affecting the tax system and challenge HMRC on whether it is controlling costs and delivering on its stated aim to run the tax system in the simplest, most efficient, customer-focused and efficient way. So today, to help us with all of that, we have Sir Jim Harra. I'm so sorry, Jim. Sir Jim Harra, first Permanent Secretary and Chief Executive. Jim was appointed as HMRC's first Permanent Secretary and Chief Executive in 2019. And Jim, I think this is your last appearance before the committee, so can we thank you very much. You've been a fairly regular appearance before this committee. You've always dealt with our sometimes intrusive inquiries in a very polite and considerate way. So we do thank you very much for all that you've done for this committee and wish you well in your endeavours in the future.
Thank you.
We've got Justin Holliday, who is the Chief Finance Officer and Tax Assurance Commissioner, and Justin has been the Chief Finance Officer since 2015, June 2015. And finally, Lucy Pink, Director of HMRC's Strategy. Lucy joined HMRC in 2017 and has been Director of Strategy since April 2022, I think. We also welcome again Edward Pinney from the Treasury Officer of Accounts team. Welcome, Edward. So, without any further ado, I think we're going to launch, if we may, straight into. I've lost my pen. Oh, here we are. Launch straight into our correspondence, if we may, Mr. Harra. And Lloyd is going to help us with that, please.
Thank you, Chair. I've got a couple of questions, so I'll keep them as brief as I can, if that's all right. And it'd be good if we could keep the answers succinct, just so we can get through them all and then move on to the wider session. Thank you for the correspondence. It was a useful sort of starting point as to where HMRC are when it comes to the tax gap and high net worth individuals. My first thing, just reading through your correspondence, is that given the limited nature of the current estimate for the offshore tax gap, which was described in the letter as a subset of the overall tax gap, and the fact that this estimate is likely dwarfed by reports of one individual's likely tax bill, do you actually think that HMRC is capable of knowing the full extent of taxes owed and which could be held offshore? And how do you, in the future, as an organisation, propose to widen the scope of the offshore tax gap statistics?
I think we are well familiar with the risks from offshore evasion and avoidance structures and how to counteract them, but it's extremely difficult to measure it. And we've made our first sort of experimental statistics which look at one element of the individual's income tax gap, but of course there are many other elements to the offshore gap which are very difficult to get to measure to a standard that meets national statistics. But we are familiar with the risks, and we do have units that, for example, we have a wealthy compliance unit which is specifically focused on wealthy people for whom offshore risks are a key element.
Thank you. Also in the correspondence you highlight that investigating offshore tax evasion poses significant challenges, and you've kind of made that point again today, due to the complexity of structures that are used by these wealthy individuals. And in the letter you made a specific point about tackling the accountants and the lawyers who set up these complex offshore structures. So could you go into a little bit of detail about how you plan to take action on that specific point, and how and what the strategy might be to go after those accountants and lawyers? Because, like you said, they are, well, in the correspondence, they are, the key to enabling these structures to operate so freely.
Yes, so obviously the taxpayers remain responsible for their tax affairs, including the people who they appoint to act as their advisors. However, it is increasingly our aim to improve standards in the tax advisory market, and to tackle those advisors the minority who do harm, and we have been given increasing powers to do so, and the government is committed to looking at what more we need. So I think we have to have a two-pronged approach, tackling both the taxpayers and their attitudes to tax compliance, but also the people who might tempt them from the straight and narrow. We also work very closely with our international partners. The UK is a member of what we call the J5, which is a group of 5 jurisdictions across the world that share intelligence and assist each other where we need to find out information that is outside our own jurisdictions.
Great, thank you. We also know, and this was sort of touched upon in our letter and the correspondence that you provided us, that some nefarious and wealthy individuals do use trusts and a web of trusts, often offshore trusts, to both avoid sanctions but also to avoid tax. So could you just perhaps go into a bit more detail about how you plan to tackle the specific challenges posed by the use of trust structures to evade tax?
Yes, so trusts obviously can be used for a lot of legitimate purposes, but they can also be used, or attempted to be used, to avoid tax. There is long-standing anti-avoidance legislation, both the transfer of assets abroad legislation, which is one of the oldest pieces of anti-avoidance legislation on the statute books, and also the settlers legislation, which restrict the ability of people to do that. And the government did commit in the autumn budget that they will review the effectiveness of those rules, both to ensure that they are effective in enabling HMRC to tackle avoidance, but also that they give sufficient certainty to taxpayers about how to stay on the right side of the line. And I expect there will be a consultation on that shortly. And
2 quick last questions, if that's all right. And you've mentioned this already today, but in the correspondence you shared with us, you did mention that there is a range of powers that HMRC have to tackle tax avoidance and evasion. Could you provide a bit more detail on how frequently these powers are actually used by HMRC? And if you are able to provide some figures, that would be great, or if not, follow up with that with the committee.
If I take just wealthy customers, so wealthy taxpayers are the segment that we focus on as having the greatest risks of using offshore avoidance and evasion, because they've got the ability to move assets offshore, and they've got complex affairs, and they've got the ability to get advice. And so we've got a specific unit that focuses on managing their compliance. We have about 251 of those taxpayers under criminal investigation, and there are 101 of them who have received charges, and are awaiting trial. Also, in the last 5 years, a further 300, our fraud investigation service, have settled out of court with them for tax interest and penalties under one of our codes of practice, which involves the taxpayer acknowledging their offence and taking steps to improve their compliance for the future.
Okay, I mean, it'd be useful if there are any sort of targets in the future in terms of how often these powers are used, and how many criminal investigations you hope to bring. If there is any sort of target or strategy there, if you are able to provide more detail to the committee in a written form, that would be very helpful.
I'm sure we will in due course, because we are committed to increasing our coverage of both this segment, but also our use of criminal investigation.
Good. And then one very quick final point, if I may, Chair. In the correspondence, you mentioned use of data taken from the Register of Overseas Entities to identify and investigate where tax might be owed by a wealthy individual. Yet we know that often individuals hide their ownership of a property on this register by holding it via a trust, often offshore as well. So given the sort of the trust loophole that exists in the Register of Overseas Entity, can you reassure us that this is actually an effective approach for ensuring that all tax is collected?
Yes, so I think internationally we've made big strides in recent years in terms of gaining transparency internationally and sharing information, but of course it's incomplete, and once you cover one area, people who are determined to evade will move their assets into an area where there isn't sharing of data. So it's a constant work, particularly through the OECD. We do have access, obviously, to beneficial ownership information is really important as well, as opposed to nominee ownership. And we've made big improvements in access by HMRC and other law enforcement agencies to trust information, for example. But we are continuing to work on that. I mean, crypto assets is really the next area where we've reached international agreement, where we will gain greater transparency for tax jurisdictions about the assets that are being held in that way. But I think it'll be a never-ending.
Yeah. So I suppose just for your replacement, I suppose, as the chief executive, it would be really important to see that loophole closed to enable the HMRC to do its job effectively.
Yes, I mean, I think it's important that HMRC continues to exercise influence as a tax authority internationally through bodies like the OECD, because that's the way you can make progress.
Thank you. Thank you very much, Lloyd Hatton, and thank you, Sir Jim, for all those answers. Of course, for those that look at these matters, we will be, I think, conducting an inquiry into tax collection from wealthy individuals within the next few months, so now that we can pursue these matters then. But thank you very much for those answers, very helpful indeed. I have one further question at the top of the session, which I don't know whether you've been warned about or not, but it's this, and it's back to our old chestnut of online marketplaces have raised concerns with us that too many overseas companies are evading VAT by presenting themselves as UK-based, something we've reported on recently. And some online marketplaces have argued that collecting VAT from all online traders using their sites would help close off this risk. Would this be administratively workable within the current VAT rules?
I mean, I think it would be a matter for ministers, and it's something we would keep under review. The general practice is that UK businesses manage their own tax compliance. In the meantime, we continue to work with the marketplaces to make sure that they operate good quality processes for identifying businesses that are not established in the UK but may purport to be. And generally, we are finding that the online marketplaces are rising to that challenge, and with our support, are doing a good job on it. But again, it is relatively early days, I think, in their obligations, and certainly one or two of them we are working very closely with to improve what they do. So I can understand why they would wish to be absolved of that responsibility, but at the moment, that is a responsibility that is placed on them, and our job is to make sure they comply with it.
Well, having pushed for a change so hard, we wouldn't want to see the extra £1.5 billion collected by the online marketplaces jeopardised.
I agree, and certainly that boundary between UK established and non-established is one that is a high risk area in that part of the tax system, and one that we need to make sure is policed effectively.
Have you considered whether such a system would be more cost effective overall if it imposed additional costs on HMRC?
This system of making online marketplaces responsible for everyone's VAT. I'm not aware that there are no plans to introduce it. That is something that the government would keep under review. Successive governments have made changes to these online marketplaces rules since 2016, and they have made big inroads into non-compliance, both with VAT and with customs duty. But it's something I think we would keep under review.
Very helpful. Thank you very much. We now come to Oliver Ryan, please.
Thank you,
Chair.
Hello, good morning, Sir Jim. What progress have you made on your key strategic measure to reduce the cost of running the tax system, especially within the context of the increase in staff costs that you've seen? I think you've had something like a 15% increase in your costs since 2019-20.
Yes, so I'll let Justin come in a moment to describe the efficiencies that we've made during the current spending review. So first of all, the top metric for the cost of running the tax system has stayed fairly constant in recent years. So it costs us about 51 pence to collect every £100, and that has stayed stable really for a number of years. There's obviously an underlying upward pressure on us in that the number of taxpayers in the system is increasing all the time, and the amount of revenue we collect is increasing all the time, and that affects both the number of staff that we need to deal with customer queries, but also the number of staff that we need to manage compliance and keep the tax gap low. And that is really what has been the driver of the increased staffing in recent years. The National Audit Office report looks at the base year 2019-20, which was the last year of the 2015 spending review, and I think, as the report acknowledges, there were two sort of structural funding gaps in that year. One is that during the SR15 period, the number of staff in our compliance function was declining, and that was not something that was sustainable if we were going to continue reducing the tax gap. And then the other was that we had been making savings, I think, in our IT function by effectively building up technical debt in that function, which would all have to be paid off at some time with modernising the systems. And in the 2020 and 2021 spending review, we got funding to address those two aspects, which is why you saw the increase. Obviously, the increase in our costs, 15%, 16%, is broadly speaking the same as the increase in the revenues that we collect, and also in the growth in customers in the tax system. So it kind of reflects those things. But during the SR20 and 21, we did undertake to deliver efficiencies, and Justin can explain what we've done.
So in the period that the NAO report covers, we made about £500 million worth of efficiencies. So if we had not made those efficiencies, we would be spending £500 million more than that. In the last spending review period, which is this year, the year we're currently in, and the previous 2 years, we were targeted with raising £500 million worth of savings, making £500 million worth of savings rather. And committee will recall that this was the period of quite a lot of economic shocks and inflation. And through that period, we have actually said we were asked to try and absorb some of that inflation costs and some of those shocks. And we will have made, by the end of this financial year, about £700 million worth of efficiencies. Those are in three broad buckets of cost areas. So the first one is in just general process improvement. The second one is in the utilisation of our estate and moving from a rather expensive PFI arrangement to more normal property arrangements. And then thirdly, notwithstanding what Jim was saying about the fact that we've got an underlying technical debt, we have also been moving to improve the efficiency within our IT function. So those are the kind of broad areas of saving. And as I said, if we had not made those savings, we would be, rather than our costs roughly keeping pace with level of revenues, our costs would have increased at a significantly faster rate than revenues.
Thank you. I suppose what's concerning is £4.3 billion is quite a lot of money. And as much as you say that costs have increased, but revenue has also increased, there's another section in the NAO report which talks about the sort of efficiency of the staff take that you've taken on. I know other people will cover this in questions later, but I'm cautious that almost your income per capita has fallen. So your efficiency, if you like, is decreasing, despite the fact that you're increasing the amount of staff that you've taken on. I think anybody looking at those figures, certainly my constituency, would think that £4.3 billion is a lot of money. Granted, you do bring in £829 billion later, and there is a cost to the tax system. But it feels to me that the whole system is not acting efficiently enough, and there's probably more savings to be made in areas like digitisation, AI, making sure that people can do their own tax arrangements efficiently. And some research that I kind of conducted outside of this looked at places like Estonia, Denmark, Finland, Canada, Australia, and the tax systems that they have, which look to be more efficient for the consumer. I know that you've got a strategy in place to do some of that by 2030, but it just feels to me like that's a little bit too far down the track and not moving quickly enough. Although I appreciate you saying you've kind of you've made some efficiencies in the past few years. The question, I guess, is probably more for Sir Jim, is that you did some international comparison work in 2016 just to benchmark yourselves against OECD not quite competitors, but other sort of similar markets or comparators. We haven't done that since then. Do you have an intention to do that in future? Because it would be healthy, I suppose, for us to know, in terms of international comparators, how efficient our tax system is.
Yes, so I mean, you're right. In 2016, McKinsey carried out a benchmarking exercise across 21 tax administrations, and HMRC came out fifth out of the 21, and so we were well up in the top quartile on most things. Since then, whilst there's been no repeat of that formal benchmarking exercise, we do obviously through OECD in particular benchmark with ourselves and sort of self-assess, if you like, with other jurisdictions and learn from them and they learn from us. I would say in terms of the sort of productivity, if you like, of staff, there are two. First of all, there's clearly a big area where there are further cost savings to be made, and that is in customer contact. Whilst we have reduced customer contact in recent years through digitisation, despite the growth in customer numbers, nevertheless, we still reckon that about 2/3 of the customer contact that we get on our helplines, for example, customers should be able to self-serve and do that digitally, or it should be automated. So there's lots of scope for us to continue improving our digital services and improving their tech up and reducing that contact. The other area, and this is where I think HMRC is sort of different from many other departments, is in compliance. So what the NAO report shows is that yield per staff year unit in our compliance group reduced slightly during the period and then started rising again. A key reason for that was in, I think, 2021-22, we recruited about 4,000 new compliance staff. Their costs go in straight away, but they do not produce yield straight away. We assume a zero yield from them in year one, and it's really 4 years before we treat them as fully productive. And not only are those staff members not producing yield during that period, but we also have to move existing staff away from frontline work to mentor them and support them. So I think when you bring in big slugs of new compliance resource, you will expect to see a dip and then a recovery. What's different about HMRC, I think, which affects the way we are given our budget, is generally speaking, if you add money to HMRC's budget, you will get back more than that costs. And therefore, for example, the autumn budget, it was announced that we will be getting 5,000 additional compliance officers over this Parliament. That will increase our cost base, but will bring in far, far more revenues than it costs. But every time you add compliance resource, it's the marginal rate of return of that additional resource will be probably lower than the average rate of return of the existing resource. So I think that's just something that we need to get more sophisticated at measuring and presenting. But it does mean that sometimes focusing on cost savings in HMRC it can be a false economy compared with what you really want to do is optimise the return, I think.
I suppose, Sir Jim, the acid test, what you've just said to Mr. Ryan, is if you have a higher cost base, will the tax gap not just be maintained, but will it be reduced as a result? And presumably more skilled staff that you're recruiting.
Absolutely, that will be the aim. So with the additional 5,000 compliance officers that were announced at autumn budget, we expect to increase tax revenues by about £6.5 billion a year by 29-30 compared with the base. And so that is obviously a very significant return on that investment, and you would expect that to be reflected in suppression of the tax gap.
Those were the figures, I think, given in the budget,
yeah.
That £6.5 billion figure. Do you think that is achievable?
Yes, so that is certified by the Office of Budget Responsibility as a sort of central estimate. We will try to do better than that. The £6.5 billion a year is made up, most of that is from the return from the staff that we are being given in debt management and compliance. Some of it is from policy changes to close loopholes and make it more difficult to avoid and evade tax. But all of those are sort of costed and certified by the Office of Budget Responsibility, and we will obviously monitor them. And if we can do more, either with the resources we've been given or with more resources, we will do so.
Thank you. Well,
Very small. It was more
Very
for
small.
more for Sir Jim. Before you, are you moving to another job or retiring? Or what? I don't know where you're off. Retiring.
Yeah.
Oh, you don't look old enough. Well, there we go. Is somebody sort of talking to you before you retire about your views on the simplification of the tax system, about how we might be able to look at it from a different direction from a consumer perspective? Are they trying to kind of exit interview you before you go? And
over.
And frankly, yeah, is it kind of if you can be kind of candid as you can be, I suppose, do you see some areas in our tax system that through your time in this job you feel need to be ironed out if you want proper efficiencies?
So first of all, in terms of the handover, my sort of rather unusually, I think, in the civil service, my departure was announced about 6 months in advance so that the job could be advertised and filled. So my successor has been named, and although he still has his own day job to do, we have been doing a handover and making sure that he understands my views, although he will have his own. But obviously, I don't run HMRC single-handed. I've got an executive team who know what they are doing. I think the tax system is very complex. That drives opportunities for error and evasion and avoidance. It also drives cost, because taxpayers, the more complex it is, the less certain they are about what they need to do, so the more they are likely to contact us. However, a lot of that complexity is down to policy objectives that government wants to achieve and fairness it wants to achieve in the tax system. But I would say that HMRC's job is to make sure that we give the best possible advice to ministers so that the right trade-offs are made between those.
Right, thank you, Mr. Brown, very much. We need to speed up a bit with questions and answers. Chris Kane, please.
Good morning, Sir Jim. Happy retirement to you when it comes. I am the MP for Stirling and Strathallan, so I'm a Scottish MP. I'm conscious that when we talk about the tax system, that we in Scotland have our own Scottish tax rates. I know that this is subject to different reports from the NEO, but I think it's helpful to talk about it in the round in sessions like this. So I wonder if you could talk for a few minutes about the differences in running the Scottish tax system and the challenges associated with this, which are running concurrently with your efforts to reduce create efficiencies in the overall system. How does administering the Scottish side of things interact with that?
So HMRC administers the Scottish income tax as well as UK income tax, and as you say, we account to the Scottish Government for that, and we are audited and subject to Scottish Parliament scrutiny of that. We administer that income tax system really at a UK level, so we don't have a separate sort of compliance regime for Scotland, but we do, of course, look at any specific risks that might arise from differences in tax rules in different jurisdictions. Scotland, there are two issues with Scottish income tax that could pose compliance risks. One is that the higher rate of tax in Scotland creates a greater incentive on people to evade or avoid potentially. And then the other is that there's a residence rule, and people may not comply with that rule or may try to game it, and those are two risks that we are alive to. Our view at the moment is that the differential is probably not sufficiently significant to pose a very material risk that requires its own management, but it is something that we monitor very carefully.
Just to clarify that, it's broadly the same. You're not seeing anything that causes you concern.
Yes,
with that.
the way we administer the tax system is the same. The compliance risks that we see, we generally see right across the UK. There are a couple of factors in the Scottish income tax that could drive different compliance behaviours, and therefore that is a risk that we have to control and have to monitor. But at the moment, we don't think it is sufficiently great to actually be manifesting in taxpayer behaviours.
And in terms of getting the efficiencies in the system and embracing new technologies, is it the case that the differences and the differences are being held to account by the two parliaments, that is not causing any issues? You're getting the same efficiencies and there's no differential between them?
So we have to spend a little bit more money on IT and accounting, for example, to make sure that we can account for the two pots of tax separately, so obviously there's a little bit of cost in that which the Scottish Government pays us for, but I don't think it's particularly material in the great scheme of things. You could argue that the additional rate band in Scotland makes its tax system a little bit more complex than the UK tax system. That might generate a little bit more customer contact. Again, it's really at the margins. I don't think we can see any impact of that.
Thank you, Chair. I think it's important that this committee gets side of that.
Absolutely.
So it's bringing things together. So thank you.
Thank you very much, Chris. That's very helpful. Clive Betts, please.
Yes, Sir Jim, morning. Clearly, your base costs are a number of people who pay tax or in the tax system. Back in November, you told the committee that one of the challenges that you had was the number of people now paying tax as the tax threshold was frozen. But back in 2022, the tax impact and information notes, which assesses the impacts of tax policy changes, said it didn't think there was going to be any impact from the freezing of the tax thresholds. So why was that assessment made then, which clearly isn't accurate now?
Sorry, I don't have that tax impact information note to hand. I mean, I think for the freezing of tax thresholds means that more people come into the tax system, so there are more people for us to deal with. It also means that more people go into higher rates, and our experience is that people's tax affairs become more complex as they go into higher rates, and therefore we see greater levels of contact. There are some changes which are not necessarily policy changes that have affected this. So, for example, there's a combination of freezing thresholds for the tax-free allowance for bank and building society interest, combined with the increase in interest rates recently, has meant that this year, for example, we've seen a very significantly greater number of people for whom we have to adjust their pay-as-you-earn code for their bank and building society interest, and that has certainly driven more customer contact than we have previously seen.
Yes, I mean, I'll come back to the first point. I mean, clearly the tax impact and information notes are published, they're official, they're a government's assessment of what impact tax changes will have, and it said threshold wasn't a problem, wasn't going to have an impact. So if you're saying at this point you haven't got information to hand, I think it'd be very helpful if a note could come to the committee, because obviously we're very reliant when changes are made about proper assessments being done of their impact.
Perhaps I could help the committee in paragraph 2.4, page 27.
Right.
And if I can take you to that, Mr. Harra, that sets what Mr. Betts is saying very clearly. 2.4, page 27.
So the TINs indicated a gradual increase in HMRC's running costs over time. Yes, I mean, I will certainly write to have a look at that TIN and write to the committee. I mean, it is our experience that we are seeing a significant increase in the number of customers, which has an upward pressure on our costs.
Well, I think that would be instinctively what most people would imagine would happen when you freeze tax thresholds. You just, so I think a note about that would be helpful. You've just explained, Sir Jim, that as people move up the tax brackets, that can get more complicated as well, and produce more questions for you, more interaction. But the other side of it, which I think many of us would feel is going to have a big impact going forward, are people at the bottom end who've never paid tax before, been brought in. Many of those perhaps pensioners as we go forward. And I just wonder whether the waiting times on your call systems are going to get longer, because pensioners may be the very ones who phone you rather than send you messages by email or whatever.
I can certainly pick that up, but maybe Lucy has, I think, something to say.
So just on the previous point about the tax information and impact note, I think when we calculate the main costs on HMRC in those notes, we often focus on big technology change, and I do think there's something, but we do publish them, and the point is, if there is feedback or if there are lessons to learn, we have an opportunity to update them, so that's something we could take away as well.
I think I don't want to put words into my deputy's
Go on.
mouth. I think what he's saying is that it's so counter-intuitive that you've got all these extra taxpayers, including lots who have never been in the tax system at all, and therefore are not familiar with it, like those who have been. It's very counterintuitive to produce a TIN that we were rather surprised, I think, to read that. So I think
obviously we'll look at that, Chair, but I do think, I suspect that in this case, one other thing that happened was that after the freeze was announced, there were changes in the economy, for example, inflation, which drove up wages and therefore probably brought more people into the system than might have been anticipated initially, but we will check that off. Picking up your point about pension, so you are right that increasing numbers of state pensioners are coming into the tax system as a result of the combination of the freezing of the thresholds and the triple lock. For many of them, if they have a secondary source of income, they may have an occupational pension or a job, then we can adjust the pay-as-you-earn code to do that. We still get a fair bit of contact from customers then querying why their code has been adjusted for their state pension when that happens for the first time. What we have seen, however, is there's a significant number of people who do not have either any or sufficient secondary income for us to do that, and we have to issue them with an assessment, which is basically a bill for them to pay. And we are currently seeing, and therefore we're seeing a much more larger number of those assessments issued than was the case in the past. And currently about 26% of them generate contact from the customer, either querying why they've had the bill or asking to pay, for example, to pay it by instalments, and that is, one of the big drivers of the pressure on our system, on our services, probably in the last few months.
And are you putting resources into your telephone service? We've had discussions about that in the past, that it's really strained and not able to respond currently to the demand. So if this demand goes up as a result of the you've just described, for pensioners, are you going to have extra resources to cope with it?
We were given some extra funding earlier this year for the current year, which is also built into our budgets for next year, which we've been able to use to increase the number of advisors on our helplines, and that enabled us to improve our service levels over the course of this summer, and to the point where we were hitting our service standards in Q3. And we are currently redeploying more resources, particularly onto what we call our pay-as-you-earn helpline, which deals with those types of queries that you mentioned. Now that we've passed the self-assessment peak, we want to put more resources into making sure that we deal with those calls. So I think there are about 1,600 more advisors on our helplines as a result of that additional funding.
Given that the tax thresholds are going to be frozen going forward, that's government policy, have you done an assessment of the cost to yourselves of that policy going forward for future years?
We have a forecast from the OBR of the additional number of taxpayers, and actually I think 2023, 24 and 24, 25 are the main years where there will be growth, although we will continue to see that in subsequent years. We are, I think, now getting better insights into how customers will behave in response to that, because although we can see growth in the number of taxpayers, the question is, how will they behave? Will they telephone us when they get a simple assessment or a coding notice, or will they not, for example? And we had to make some forecasts of that, but we've now had a run where we can get good data that enables us to understand how they're behaving and get better forecasts for the future. So we do that, and I think we've now got an opportunity to improve our operational forecasting.
So you're aware of this potential problem, and going forward we shouldn't be hearing 2 years' time, oh well, actually the service has got worse because all these people are now in the tax system and we hadn't really anticipated that they were going to be there.
We're certainly aware of it, and Myrtle Lloyd, who's appeared before the committee before, who's my Director General for Customer Service, lives and breathes it every day, I can assure you.
Thank you very much, Sir Jim. Lloyd Hatton, please.
Thank you, Chair. Reading over the NAA report, I was struck by the figure for the administrative burden on businesses of £15.4 billion a year, and the fact that this is likely an underestimate and a very conservative figure. I also find quite sort of stark a figure that was produced via a PQ that I did quite recently, which is that HMRC's large business directorate has a total of 2,422 full-time equivalent staff, working with large businesses on their taxes. Do you assess that the administrative burden shouldered by large businesses versus small businesses perhaps isn't entirely equal? And could you just go into a bit more detail about why is it that large businesses, who often have more compliance resources already, get that additional taxpayer-funded support through the Large Business Directorate?
So I'll pick up the point about large businesses, and I might then ask Lucy to come in on admin burdens more generally. So I suspect if you had large businesses in front of you, they may say they don't welcome all of that additional resource being deployed on them because it's in my customer compliance group, and its job is to make sure that they are complying with their obligations and paying their taxes, and it reflects the level of risk that we think large businesses pose to tax revenues, both because they are big taxpayers, but also because they tend to have the capabilities to organise their affairs in ways that they attempt to minimise their tax, and therefore we need to be on them. So we have a compliance strategy for large businesses, which effectively means we man-mark them, and we put a customer compliance manager on them who understands the risks that they pose, their attitudes to tax compliance, and make sure that the CCM can bring to bear on their large business client the right resources from within HMRC to tackle that. So it's not about giving them a better service, it's about managing the risks they pose to us. But I will pass over to Lucy.
So just on admin burdens, in general, it is our objective to minimise them where we can, and one of the ways we want to do this is through tax simplification. This government, as previous governments, have made commitments to our Minister, the Exchequer Secretary, at the autumn budget, said that's one of the main ways that he wants to achieve his objectives. We made some announcement at the autumn budget on this, and the Minister is currently consulting with stakeholders, and we hope throughout the spring to make some further announcements on simplification, because we think that's the main way to help reduce burdens on business.
Good. And then I suppose just taking a slight step back from that and looking again at that figure of £15.4 billion a year in terms of the administrative burden on businesses, I suppose a really simple question. Why is the cost to business of complying with our tax system just that high?
So first of all, I think it's an inevitable feature of doing business, I'm afraid, that you have to comply with your tax obligations, and you will have to deploy some cost to do that. Our aim, obviously, is to make that as low cost as we possibly can, commensurate with making sure that businesses comply. In the case of small businesses, our aim really is to build tax compliance into the way they run their business, so that it actually just happens as they run their business. And I think we have probably largely done that in the case of pay-as-you-earn and increasingly VAT. You run your payroll system will do your pay-as-you-earn compliance by and large. Increasingly, thanks to Making Tax Digital for VAT, you run your business accounting records, they will take care of VAT compliance for you. And the aim of Making Tax Digital for income tax is to sort of build tax compliance into the record keeping that businesses do, rather than have it as a cost that they have to do on top. Just a couple of other, and the government has also announced a consultation on e-invoicing, which has the opportunity both to help businesses and help tax compliance, and again is a way of building tax compliance into the way that the businesses sort of run their business. One significant element of the admin costs that are attributed to the tax system is the cost of invoicing, because the only, I think, legal obligation on a business to issue an invoice is the VAT system, whereas in practice, even if you didn't have the VAT system, we know that lots of businesses would issue invoices anyway. So that is a cost that is attributed to the tax system, but I would argue is a cost that would be incurred anyway. But e-invoicing, I think, is looking at ways of integrating that much more in the way that they run the system. I think business accounting software and business software offers us real opportunities to reduce the burden on businesses of certainly the time that business owners have to take to manage tax compliance, because it just becomes part and parcel of what they do every day. Okay.
And then if I might just move the conversation on slightly from businesses to individual taxpayers. This report picks up that, as it stands, HMRC does not maintain a model that actually estimates the cost impact of tax changes on individuals. So why is it exactly that HMRC does give so much less attention to the cost to individuals of administering their tax compared to businesses?
I don't think we agree that it gives less attention, actually. I think the way we look at the impact on individuals is not just about cost, but actually the wider experience of individuals. So if you think about the customer experience, our understanding of individuals, it's the time taken, but it's also the worry, the ease, the understanding. And we try to look into that through our research. We do in our TINs talk about some of those elements. They're often in qualitative rather than quantitative ways, but then we also have measures of ongoing engagement and experience with our services.
You have this figure, I think, is that you currently calculate that the cost of customer time is £18.66 per hour. That's sort of 3 years out of date now. So can we expect that to be refreshed to reflect actually how much time it might cost an individual to administer?
So that's a kind of internal calculator that sometimes helps us give a bit of an understanding.
If it's 3 years out of date, you can appreciate why an individual might think the HMRC might have a slightly distorted understanding of actually how much time people spend administering their tax.
So the internal calculator, I think we are going to, and the NAO recommends itself, that we're going to look into the kind of feasibility of what we can do to try and give up-to-date cumulative assessments regarding individuals. But what we do is when we do publish our tax information and impact notes, we try to give kind of qualitative assessments. And as I say, I think we do have an up-to-date understanding of wider individuals' experience, and that's where we focus our attention. And I think that's where our feedback from individuals is that's where they want to make us look in terms of kind of where are their pain points with the overall administrative system in general.
If I could press a bit further there, and we've touched on this before when you've come before this committee. In total, taxpayers spent 719 years on hold to HMRC in the past year. So you can understand why, if an individual watching this today sees that actually the internal figure that you use is 3 years out of date, they might say, well, actually, this is why HMRC has a slightly distorted understanding of how much time and money is wasted by an individual and energy on administering their tax. It also, I think, will slightly frustrate people to know that actually much wealthier individuals do have a slightly different relationship with HMRC. Often HMRC does reach out to wealthy individuals before they even file their taxes. And if you have an income of over 200,000 and assets of at least 2 million, they may actually speak to you before you file your tax return. Whereas less wealthy individuals don't get that relationship with HMRC. I know there are good reasons why you take a more proactive approach with wealthier individuals, and we've discussed them today. But you can see why, for the public at large, it's deeply frustrating if actually you've got, currently more than 1,000 people working in HMRC with those wealthy individuals. I think the last figures say 1,014 people were working with that wealth team at HMRC, and yet you've got many millions of individual taxpayers who find it really difficult to get anything out of HMRC, and we've touched upon that before. So I suppose it would be really helpful for the committee to understand when you're going to update that figure around how you calculate the cost to customers' time, but also just an understanding about how you're going to improve your relationship with non-wealthy individuals who equally have to use HMRC every single month and every year.
Yes, so first of all, if I just pick up on the costs, the admin costs for individuals, we are obviously committed to looking at the feasibility of coming up with a measure for that, and that's obviously a recommendation that we've received. I do think, particularly for unrepresented taxpayers, the financial cost is actually the sort of time and worry and burden on them, where I think there are probably metrics we do have, like net easy and customer satisfaction, that captures that, but we are committed to looking at the feasibility of coming up with a financial figure on the wealthy and giving people a better service. So first of all, as you recognise, Mr. Hatton, our wealthy unit is in our customer compliance group, and it's there because of the risks that wealthy people pose to tax compliance and the need to manage that.
I completely accept that, but you can understand why the public find it very frustrating. And it almost makes you think, do you think, Sir Jim, that actually it would be more accurate to have a different calculation for extremely wealthy individuals versus the majority of the country when it comes to how much time is spent per hour on administering their tax, particularly considering often those wealthy individuals will have an accountant. They will have a tax expert who they can pay to do this. Those people who aren't in a position to be able to pay an accountant or a tax expert, it will be more costly for them because they're having to do it all by themselves. They don't have someone calling them up from HMRC, and they don't have an accountant who can take this burden away from them.
I agree that I think a key difference in these groups is the represented versus the unrepresented. Represented taxpayers pay someone to manage their tax compliance for them, and there is a financial cost to them that we can measure. Unrepresented taxpayers don't bear that financial cost, but they can bear other sort of personal costs, if you like, of administering the tax system, and I think getting a grip of that is important, and that's probably less of a financial figure.
Although, so Jim, if you have to take a day off work to be on hold to HMRC, that is a financial burden as an individual. Equally, if you're a micro or small business that is having to pick up the phone yourself as opposed to use an accountant to do that for you, that's a financial cost too, but I think you would acknowledge that also.
I agree, and certainly for the small and micro business costs, those are included in our admin burden cost. But so I think for the unrepresented taxpayer, the key things are to make it as simple as possible for them to look after their tax affairs, to automate that wherever possible, to make sure that our communications are clear so that they feel certain about their tax affairs, and if they do need to deal with the tax system, that we've got good digital services and good helplines.
But I suppose it sort of builds upon what Ness was saying. The NAA report makes very clear that there is declining trust in HMRC, both with businesses and individuals. So I think that's why we've touched upon this today. This is probably one of the causes of that declining trust. If I may, just one final point separately to this, I would just be really interested, Sir Jim, in what you see as the challenges around tax simplification, and as we've already sort of touched upon, the previous government did abolish the Office of Tax Simplification. Since then, last year, we heard a bit more about this from Treasury. Could you just tell us a bit more about what you see as the impact of abolishing the Office of Tax Simplification? And finally, how are we going to better evaluate how we make the tax system simpler, more cost effective, and more efficient in the future?
So, following the removal of the Office of Tax Simplification, there is now a sort of direct responsibility on HMRC and Treasury policy advisors to include simplification in their advice to ministers and to track that, and that is part of our policy making process, that they must do that. I think a big challenge in simplification is it is often very difficult to simplify the tax policy itself, because the complexity is there for a whole variety of good reasons, trying to achieve good policy objectives, maintain fairness. HMRC's job is to mask as much of that complexity as we possibly can for the taxpayer, and to make it as simple as possible for the taxpayer to understand their tax affairs, understand what they need to do, and enable them to take whatever action they need to take. Our aim, obviously, for the vast majority of unrepresented individuals is that tax is automatic for them, if at all possible. But if it isn't automatic, that they know what they need to do, and they've got a simple route to do that. So that's, if you like, administrative simplification as opposed to policy simplification. And there, I think, our digital strategy of improving our app and improving our online accounts so that people can see more clearly what their tax position is and understand what to do is key.
Do you feel that without the Office of Tax Simplification, HMRC is able to measure this and to be able to report progress? I think it's really important for this committee to be able to see whether or not it's working.
Yes, I believe so, and I believe so. And ministers have committed to reporting back in the spring on their plans for this, and it is something that is built into the priorities that the government have given HMRC for this life of this Parliament.
Just to
So Jim, I think it's this whole issue of trust that Lloyd Hatton has referred to. I mean, in your charter, promises to provide services at a minimal cost to the taxpayer. And if you turn to page 35 and paragraph 2.2, using that metric of £20 an hour, and I don't know how many of your staff are paid £20 an hour, to value customer time, we estimate the waiting times imposed costs of around 142 million on taxpayers. So this whole business of trust, surely you've got to really try and help taxpayers reduce their compliance costs. This is surely absolutely critical. And to produce a figure of £18 an hour, I mean, as I say, I don't know how many of your staff are paid £18 an hour. It just doesn't foster an idea of trust to produce that sort of out-of-date and even unrealistic information, I think.
Yeah, so, I mean, first of all, as Lucy said, that's an internal figure that we use, so it's not something that we publish.
It's in the public domain now.
It certainly is, and it is out of date, and we have undertaken to look at the feasibility of coming up with better measures of admin burdens. Going back to trust in the tax system, so I think, obviously what we've seen is a decline in trust globally with governments and with public bodies, and HMRC is subject to that the same way as everyone else. In addition, I absolutely agree with you that we know the factors that drive trust in HMRC, and one of them is competence in the services that we provide, and we have not been providing services up to the standards that we aspire to in recent years, and we know that, and that must be a key driver for it. So it is something that we're focused on. Trust is, these two know, I have banged on about it the whole time I've been chief executive. It has to be at the centre of everything that we do, because the UK tax system depends on people voluntarily complying, and it depends on them having confidence in HMRC, so that when they receive something from us, that they trust that it is right and that they don't need to contact us or query it. So it has to be central to what we do, and I think that covers both the quality of the processes and communications that we give people, but also the quality of the service when they have to deal with us.
Thank you very much for that candid answer. Very helpful indeed. Nesl Calliskin, please.
Thank you very much, Chair. And can I thank Sir Jim and his colleagues for joining the committee today. I'd like to go back to talking about the overall cost increase for HMRC with a specific focus on staffing. I know, Sir Jim, you've already touched on some of that, but if I could just go back just to probe a little more, because the overall cost has increased by 15%, specifically working on tax administration has increased by, from the report I understand, 9% between from 2020 to 2024. And it's an increase of about £100 million. So it's £100 million additional spend on staffing. And just an aside, given the conversation we've just had around customer service, certainly my residents, but I know others will find that figure of 100 million surprising and will question how that helps them gain better customer service. So I want to ask, what are the main factors that have increased your staffing costs? You have, as I say, I know you've touched on it already a little. And is it accurate to say that you've spent most of that money on higher salaries for your most senior staff?
The main driver of increased staff costs in the last few years, and will be the case in the next few years as well, is the increased number of compliance staff that we are deploying on reducing the tax gap. It is the case that our jobs in compliance tend to be higher graded than the jobs in our customer service group. So as that group reduces in size and the compliance group grows in size, you will see not just an overall increase in staffing costs because of more staff, but actually a sort of increase in the grading of staff and therefore the salaries that they get. That is a reflection of the level of training that you need to be a compliance officer and the competitive market that we are in for tax professionals. So we get, as the NAO have said in successive reports, we give a very good rate of return on that, but it does require us to pay a higher salary level for compliance staff. And so as we change the balance of our workforce from customer service to compliance, you will see that shift in the sort of grading mix and the seniority of staff.
And I'll ask you about grading mix in a moment compared to other government departments, but just on that, in terms of compliance and the more senior members of staff dealing with more complicated cases, is the way I think you put it. Is there a focus on upstream or downstream, therefore? I'm trying to get a sense on behalf of the committee as to whether those more complicated cases are dealt with before the tax deadline or after the tax deadline?
Yeah, so our overall compliance strategy is to, we call it prevent, promote, respond. So, and that's a hierarchy. So we want to prevent non-compliance ideally. We want to promote good compliance where we are reliant on the customer, and whilst we will respond to non-compliance, we want, that is the most costly way of doing it. We really want to increase upstream activity and reduce downstream activity if we possibly can. We can see evidence that that strategy is bearing fruit. So the proportion of our compliance yield that was sort of upstream increased last year to about a third of all of our compliance yield came from that. That's whether from fixing loopholes so that people can't evade or avoid, or whether it is from identifying risky claims before they are paid out and intervening to prevent them from being paid. So that's, we can see that we are implementing the strategy.
Is that the additional £100 million that you've spent on staffing? Is that what those staff members are doing? Are they dealing with the upstream compliance, or are they dealing with downstream compliance?
It's a mix. So in particular, I mean, lots of new compliance officers, they will necessarily be deployed on downstream respond activity, but it is mixed. We haven't got the we haven't got the level of analysis of our costs between upstream and downstream that we need, and I think we need to improve on that in the next couple of years. But what we are seeing in terms of measuring the outcomes for our compliance work is that more and more of those outcomes are coming from upstream activity.
Well, I wanted to ask about that because productivity has been a challenge, and I think you've provided an answer in part around the delay of seeing the returns on investment on compliance officers. I think that's how you referred to the work. But understanding whether you are getting value for money on the additional spend of staff is crucial. And to do that, I would have thought where you spend that additional resource, whether it's upstream or downstream, and understanding that really matters. So because 100 million of additional staff is a lot of money, and compared to other government departments, the higher spend of higher paid salaries will be questioned.
So there's absolutely no doubt about the value for money that we give, and indeed the National Audit Office in this report and in previous reports have concluded that.
No, but the point I'm trying to make is if you spent that money upstream as opposed to downstream, there is no question about value for money. The amount of money that is spent by HMRC is always less than the amount of return. Therefore, there is always value for money. But would you be able to get even more if that £100 million was spent upstream rather than downstream?
Yes, we believe that intervening upstream is more cost effective and is also gives a better experience for the taxpayer, and that is why it's our strategy to increasingly manage compliance upstream. You won't be able to, I don't believe you'll be able to reach a position where you've got 100% upstream. You will always have respond work because you will always have to address evasion and avoidance after it has happened. But yes, we want to use upstream activities as much as we possibly can because we think that is the most effective way of managing compliance, and that we can see evidence that we are implementing that strategy and it is having that effect.
Okay, I'd just like to ask about grade mix because the increase in seniority in HMRC's workforce exceeded the increase of, for instance, the DWP's workforce and in the civil service as a whole. So HMRC's staff mix is 54% in senior grades, and that's much higher than, for instance, DWP's, which is at 20%, and more than the civil service as a whole, which is 45%. So it's about a 10% difference between the whole of the civil service and HMRC. Why does the HMRC have more senior members of staff compared to other government departments?
So I think the main reason for that is because of the growth of our compliance group. The compliance work that we have to undertake means that we have to pay higher salaries to attract the staff that we need with the training that requires. And so I think that's the key reason, really.
Given that staffing costs have gone up, how can you reassure the committee that staffing costs have gone up and productivity has gone down? How can you reassure the committee that you are delivering value for money when an important comparator i.e. other government departments, are spending less on senior staff?
I'm not sure how relevant those comparators are, because we're all doing a very different job. I think the grading that we require in our compliance group reflects the challenges we have in recruiting and training and retaining the staff that we need to do that work. When it comes to the productivity, as I've mentioned, when we recruit large numbers of new staff, we do see a temporary dip in productivity because they are necessarily not as productive as experienced staff. Indeed, in year one, we regard them as having zero productivity, but their costs are in our cost line. So I think we have to measure the productivity of compliance staff over time, and I think we need to look at whether we can, adjust for the costs and productivity of those trainees, because I'm conscious that over the next 5 years we will be bringing in roughly 1,000 new trainees into our compliance group every year, and that is they are going to depress the productivity in the short term, but bear the results that the OBR have signed off on in the longer term. So I am confident that we are managing our grading according to what we need to recruit and retain the right staff, and that we give a very good return on that. But of course we've got to manage our productivity, and we've got to get it back up to the levels that experienced staff have had before.
So you don't feel that the organisation is too top heavy?
No, I mean, if I thought it was too top heavy, I would change that. But it is the case that as we continue to shift the balance of our workforce from sort of customer support, which we're increasingly digitising, to compliance and digital jobs, you will continue to see, I think, that change in the grading mix and therefore the cost mix of the organisation. And I think that's a deliberate thing.
Are you happy, Nizzle?
I think.
Are you complete with your questions? Would be a better.
I absolutely. I note all the responses. The only thing I would say is at a time where resources are scarce and the public are looking for more value for money, where our government as a whole needs to be doing more with less. And I come from a local government background where, for a long time, senior officers have had to do more with less. I think it is hard for people to not question why the HMRC has got more senior members of staff compared to other departments. That's notwithstanding the very detailed responses that you've given us.
Can I say I completely acknowledge that, and HMRC has got, in terms of its transparency, has got a trick to turn, because we've got to demonstrate that we are doing more with less, hence the efficiencies that Justin mentioned, but we are also being tasked to do more with more, because the government is giving us more resources to bring in more revenues. So we've got to be able to set out our performance in a way that demonstrates that we are doing more with less and doing more with more, if that makes sense.
So we will be coming back to Justin Holliday's doing more with less through technology. I think that's really important. But we're going to take a short break now. The clock stands at 11:12. If we could be back here by 11:20, bearing in mind there will be microphones on and phones and so on. Just be careful what everybody says in the room. We're not going to clear the room. As I say, if we could all be back promptly by 11:20, that would be really, really helpful. Welcome back to the committee. Sir Jim, why is it taking longer and costing more to remediate your legacy IT systems?
So, Chair, as I mentioned, I think during the Spending Review 15 period, one of the ways that the Department really dealt with its budgetary constraints was that it allowed its legacy estate to get more out of date, and that has to be remediated afterwards. We obviously have a very large and complex legacy IT estate, so there's a constant work to keep it up to date, whether that be by replacing out-of-date platforms with more modern ones through our transformation programs, or whether that be through just updating the existing platforms and keeping them secure and resilient and reliable. We have made significant progress. We have an internal dashboard that tracks how up-to-date our systems are and how that improves over time, but some of them have certainly proved more complex than others to remediate, and we underestimated the costs for some. And as a result of which, today I would say I'm not in the position where I've got a tolerable level of risk in my IT estate, and we need to continue investing in it.
So that's a very interesting answer, because we've got a hearing coming up on cyber security. Clearly out-of-date systems are more likely to suffer cyber attacks. You hold very sensitive data. Do you think, you'll be getting advice on that from the appropriate experts, but do you think there is a case here for speeding up renewing some of that extensive legacy estate in your IT equipment?
Yes, so I think the three key risks that we run from our legacy estate, one is whether it is as secure as modern systems can be, and a lot of our work to leave our data centres and go into the cloud, for example, was to gain access to those higher levels of security. The other is reliability and resilience of the service. So when a system goes over, how easily can you get a part or find someone who understands it to get it back up? And then the third is the cost of change. So if government announces that it wants to make a change in a policy area where we've got an old legacy system, they tend to be much slower and more expensive to change, and that is reflected in our advice to ministers. So I think the extent to which you invest in modernising all of that depends on what is your level of appetite for risk around resilience, but also what do you think is going to be your sort of agenda for policy change. My view as a accounting officer is that I would certainly like to carry less risk than I currently carry, and that's why we have been investing quite heavily, and I would recommend that we continue to do so.
So, do you understand now what more needs to be done and what it will cost, and when you expect that remediation to be complete?
So I'll possibly pass over to
yes, of course.
Justin on the programme.
Yes.
So I think we have a good understanding of what needs to be done. When we will finish is frankly a bit uncertain, because we're in the middle of spending review conversations. And we won't know but we've got a budget for the year we're just about to go into. We haven't got a budget for the 3 years after that. When we've got that settlement in June, we'll be able to give you a much better explanation of where it is that we think we will be at the end of the next 4 years.
Back to Jim's point about if a tax change is made and presumably somebody in your organisation does an impact assessment before the tax change is announced, so that the Treasury have good visibility of what actually resources you're going to need to be able to update your systems to be able to cope with that.
Yes, so as part of the policy making process, HMRC advises on how quickly we think we can make a change and what that change will cost. That can be slightly counterintuitive. If you're a minister, you might see a policy change which looks relatively simple to you in policy terms, but actually is quite costly and time-consuming for us to make. Others, which ministers might worry that that's going to be complex, we can say, no, we can do that quite quickly. Really depends on what investment we've made in the past.
And it's also, if I may, a good illustration of where things might end up taking longer than initially planned. So if there's a strong policy imperative to do something where the only viable option is in the time that we have to do it is to do it in the legacy system, that will mean that the legacy system lasts for longer because you're putting the effort into the old system rather than building a new system.
And I'm just looking to see whether we're going to cover it, but in terms of, and this is something that's sort of creeping up on all departments, unless your systems are up to date, it's going to make it much more difficult to adopt new AI systems, isn't it?
Sorry, to adopt.
It's going to, unless your systems are up to date, it's going to make it much more difficult to adopt new AI systems, isn't it?
Yes, I mean, I think the critical thing with AI is making sure that you've really got a handle on where your data is and that you're managing your data well, and definitely when you've got more disparate legacy systems, that is a harder thing to do.
And I mean, of course, AI can have a positive and a negative. It can help you sift data and discover trends, but equally it can help those that wish to carry out evasion and fraud work out ways of how you do things and how to avoid it. Yep. So it is really important, is it not, that you're looking at adopting the most modern methods of AI?
I think it is, and I think when you look at AI and when you look at IT security in general, using the language of an arms race is not an unhelpful way of thinking about it, and it's a fact of life that bad actors tend to be a bit more agile and a bit more flexible than good actors, and you see that right across big organisations, public sector and private sector.
I think that the one thing I'd like to get out of this section of questioning is that you definitely have a plan. You know where you want to go to modernise your systems.
We definitely have a plan. We don't yet quite know how long it is going to take because those funding conversations.
Well, you've got a plan.
Yes.
Nesl Canaskin.
Thank you very much, Chair. I want to ask a little bit more about the overall cost of the digital systems and why the higher spend hasn't lowered the overall cost of collecting taxes.
So in the period that we're talking about, I think there are two things going on. So the first one is something that Jim was alluding to, which is we were starting from quite a low base in terms of the state of our environment and our IT estate. And in some cases, as we have worked through it, we have found that frankly, there's been more to do than we thought there was at the beginning. The second thing in this period is about dual running. So we are building new things, but you've obviously got to keep the old things running while you build the new one. So in this period, we have also got a significant amount of keeping the old world alive whilst starting to build the new world.
And the digital business costs group, about £785 million is spent on what the report refers to as digital business group. But that has increased by 18%, so it's of £122 million additional cost. I just want to get a sense, that cost, is it on digital infrastructure spend, or are you able to give us a sense of whether some of that money is spent on consultants, for example?
So it's the cost of our technology function. So depending on the way the NEA report uses the word digital is essentially as a synonym for technology.
Is it on technology? That's what I'm asking for reassurance on. It's not, that additional cost or just the overall cost, 20% of it isn't spent on consultants on how to deliver a digital service, for example. I ask this because there have been lots of examples in the past, perhaps not at HMRC, but throughout public sector, where when you dig deeper, you will see that it's not all spent on infrastructure, but spent on consultants that might have a specialism in the area.
The nature of technology spend is that there is spend on hardware, I'll put it like that, but a lot of the spend is on people doing things with the hardware, and with the software and making it work. So when you dig into the cost, there's actually a surprising amount of people cost in your technology cost.
Sure, but I'm just looking for reassurance that people spend is on their knowledge and delivering the digital infrastructure and not on strategies and ideas for something.
So we've got a sort of mixed model for how we deliver technology. So we've got suppliers who we use, we've got in-house sort of permanent staff in our CDIO unit. We also use contractors, really, I would call them, rather than consultants. So they are digital coders, but we may bring them in from outside for a temporary period on a project rather than use permanent staff. We obviously are transparent about our consultancy spend, and we do have some, but it is really quite small. Most of our external spend would be on what I would call IT contractors.
Okay. And then my final question is a more broader one, and your views on the potential for the digital systems now and in the future to address cost pressures.
I think at the moment, we believe that in 23-24, about 69% of all the customer interactions with us were digital. So that ranges from people finding their self-assessment on return online to going onto our app and checking their pay-as-you-earn code. And so we think we've gained a lot from the digital investment we've made so far, but there is a lot more to do, both from increasing the take-up of existing digital services and enhancing them and expanding them. So we've seen very significant growth, in particular in our mobile app in the last 2 years. I think we now, in the first 10 months of this year, I think we saw over 100 million uses of that by over 5 million individual users, and that is I think a 54% increase or something on the same period last year. So there's lots of potential, I think, to remove avoidable contact from the tax system and take HMRC out as an intermediary between the customer and the tax system and let them do things for themselves. Whereas in the past, a lot of our digital services were about allowing people to transact with us. I need to file a return or I need to make a payment. Increasingly, we're now using it to manage the relationship with the customer. So, I need to find something out or I need to ask a question. Increasingly now we're using digital services to deal with that kind of demand as well. I think there is clearly scope to go further if you just look at the level of what we regard as avoidable contact that we get from customers to our customer service unit.
If I may, Chair, because I think that's a really interesting answer, because if the additional cost, and just to slightly go back to my earlier questions around the £100 million spent on staff, is around compliance, and a lot of that money was spent on higher paid staff, compare that to the response you've just given, Sir Jim, around contact with the organisation, which is also a cost to the organisation. There seems to be a disconnect, because if we are encouraging more people to use the digital services, which is the right thing to do, that isn't a complicated case that is being dealt with that require higher paid members of staff, is it?
Yes, you're right. I mean, and I think that is why you see the change in the profile of our workforce, because as we introduce digital services that replace contact, the jobs that are removed from the organisation are lower paid, lower graded customer service jobs, whereas we keep being given additional funding to do more compliance work and reduce the tax gap. That is higher graded, higher paid jobs, and that's why you see that shift. In terms of digital support for compliance...
And you view the additional spend on digital infrastructure, for example, will allow the organisation to reduce the number of lower paid staff to allow people to have contact via digital service?
I think it does that together with a number of other things. I mean, first of all, our research tells us that our customers increasingly expect to deal with us digitally, which is because it's how they live their lives, and we see higher levels of satisfaction with our digital services, for example. And so it both fits with what our customers want, but it also takes out avoidable cost from the organisation, and we tend to cash in those savings to the Treasury, so we hand those savings back, and then we have a separate conversation with Treasury about how much compliance work do you want to fund, so we don't automatically do the switch. I was going to mention sort of digital support for compliance work. So, we've talked a lot about how we are increasing our compliance staffing, but we actually also want to invest in improving both the case management systems that they use, because that will improve their productivity, but also the risk analysis and data analytics tools that we use, which help us to target the cases that we want to intervene in, and that will all improve the productivity of our compliance work and also improve the experience of customers, because fewer compliant customers will get caught up in our compliance checks.
I have a final question on risk that you mentioned earlier. Just to understand a bit better, when you talk about the risk that exists in the organisation in terms of digital capacity and capability, is that cyber risk, or is there a risk to the business, so to speak, in terms of not being able to collect taxes?
Yeah, it's much broader than cyber risk. So it goes to the resilience and reliability of the system. So they are more, if they are on old infrastructure, they are more likely to break down. And it can be then more difficult to repair them and get them back up and running again. So it goes right across the reliability and resilience and security of our systems, all of which poses a risk to tax collection that we need to keep within a tolerable level.
And there have been comparables in local authorities, haven't there, over the past few years? Cyber attacks have meant that whole council tax systems have been wiped out, and local authorities have been unable to collect council tax for years now, in some cases. Is there an ongoing assessment from HMRC? I guess I'm looking for some reassurance that there will always be that level of risk that exists, I'm sure, because of cyber attack risk, but that there is ongoing assessment so that that risk is minimised as much as possible, given the gaps in the digital infrastructure.
Correct. So we are under, frankly, as a department, we're under constant cyber attack. We are very effective at managing that, but nevertheless we are carrying risk of the type that you have mentioned. That is a significant focus of my executive team and of our board, who are really on top of us in terms of that risk. We have got a good assessment of it. So one of my first acts when I became chief executive was to bring in Deloitte to do a thorough assessment of the cyber risk that I carry. We have produced with them and with Gartner a dashboard that we use at the executive level and in our digital team to look at how we are improving that over time, and we've got that down to a real level of granularity, and our board have an expectation that over time we see that reducing, and they have an impatience really at the level at which we are achieving that, which, as we've said and as the report acknowledges, is not as fast as we would like.
And there are mitigations for each of those risks, I'm assuming, that is regularly monitored.
Yes, so we, obviously we want to protect our systems from successful cyber attack, but we also rely on a lot of monitoring of our systems to understand what is happening to them, and that's not just our digital systems. Fraudsters will try to enter via our helplines, via our web chat. They will try every way in, and monitoring on that is really important.
So, Nestle Culliston's just spawned one more question from me before I bring in Oliver Ryan. There's another lot of actors in what you have to deal with, and that's other government departments. So I don't mind who answers this question, but to what extent do you take advice from the government's digital service so that your systems are compatible with, say, Treasury or DWP, so that you can talk to each other and improve your efficiency in that way?
Yes, so GDS and also National Cyber Security Centre we work very closely with, and they are the sort of central bit of glue that holds all the different departments together. I think probably less so with Treasury, but Department for Work and Pensions is a key example where we exchange data with them. Our RTI pay-as-you-earn system, for example, provides data that enables them to operate universal credit. Obviously, our national insurance record enables them to administer the state pension and vice versa. And so, I think yesterday, for example, DWP had a short outage on their universal credit website, and that did have a knock-on effect to our services yesterday. So they are all interlinked in that way.
Thank you very much. Oliver Ryan.
Thank you, Chair. So, Jim, on customer service costs and where they've grown, why have the costs of serving each corporation and VAT taxpayer increased?
I think in the case of VAT, I think that's a temporary, a significant part of that is the temporary effect of introducing in this period making tax digital for VAT. So that was introduced from 2019 and became compulsory for all VAT payers from 2022. That has significantly reduced the non-compliance in VAT, particularly in error, but during this period involved quite a bit of cost. for us in terms of implementing the programme, but also one-off cost for businesses in terms of acquiring the software that they needed as well. So the other one was?
Corporation tax.
I don't have an
So I think the unit costs in the report cover the total cost of the system divided by the number of taxpayers. So as we have put more compliance effort in, the average cost per taxpayer has gone up. That doesn't mean that it costs more for each taxpayer.
Right.
No, so I suppose there's a few things that are raised in the report. Well, one is why you don't use cost per taxpayer as a metric, and the other is why, on average, currently, that the costs to deal with VAT and corporation tax have risen by 5%, whereas the costs to deal with income tax have fallen. Is there an answer on corporation tax as to why that's increased?
Well, I mean, if you look at the corporation tax gap, you'll see that that has significantly increased in recent years, and it's a major focus for us to get that back down again. So you will see a significant proportion of our compliance resources being poured into managing the corporation tax gap, and that will be reflected in the cost of administering CT. Won't necessarily impact on every CT payer, so it's only those that we intervene on with a compliance check, for example, that will feel the burden of that.
I understand it's not a magic measurement and it's not necessarily precise, but would you consider using cost per taxpayer as a measure of sort of broader efficiency going forward in further investigations?
I mean, it's not one that we have focused on to date. I mean, I think there are a variety of ways you can look at your costs. You can look at it under head of tax. You can look at it by according to taxpayers. Obviously, as a more significant proportion of our costs comes from our compliance work, we actually segment our compliance workforce against different types of taxpayers. So we've mentioned wealthy and large business. So applying it across all taxpayers may not give a particularly useful metric, but I think it's something that we will look at. The NAO have brought it out in their report. We recognise in the report it's not a metric that we focus on ourselves.
I think the challenge in this area is when you divide something by something, how both of those are controlled and influenced, and something like taxpayer numbers can be influenced by threshold changes, for example, which is not within our control. So any measure that you've got to be careful in thinking about who's influencing it and how it's being influenced. So I don't think there is a magic measure. You've got to look at a number.
Yeah, a few things.
Yeah.
Again, I suppose this is a much more general question, but kind of on the basis of all of that and some of the answers that you've given today, relative to the cost versus the revenue they create, and the talk that we've had about the simplification of the tax system, in your view, what is the most kind of costly and time-consuming element of the tax system that you would review if you were sort of starting from base principles today, based on the work that you do? And the outcomes that it provides?
I think there are, I mean, if you take the general story, so the general story is 51p to collect £100 of tax. That stayed pretty stable. However, during that time, we have brought the tax gap down. There's no doubt that we are being given more resources to reduce the tax gap, and that's what you see in our costs. I think, so therefore, the two areas I think we're increasingly focusing on is debt. So is one of them. So getting on top of our debt and getting the debt balance down involves extra costs. So we are seeing an increase in non-payment, which is then driving costs in HMRC to manage that non-payment and collect the debt. We need to understand better what is driving that non-payment and what the different solutions are that might be brought to bear on it, quite apart from deploying more debt collectors. And then the other is compliance. So we've seen a significant growth in the CT gap. That is a self-assessed tax, therefore you tend to have a response to that compliance risk by putting investigators in to investigate after the event. That is, whilst we get a very good rate of return on that, a positive rate of return, nevertheless in absolute terms it's it's a significant cost. So I think the small business, particularly small corporates, tax gap and the growth in non-payment and debt are two areas for focus.
Thank you.
Thank you very much, Oliver. Chris Kane, please.
Thank you, Chair. I'm going to give you a quote from the PAC report, Progress of Making Tax Digital from 2023. HMRC announced in 2015-16 that its flagship digital transformation programme, Making Tax Digital, would make it easier for taxpayers to get the tax right, helping to reduce the £9 billion of tax revenue lost each year from taxpayer errors. HMRC has had some success with Making Tax Digital for VAT and estimates that this is contributing £400 million a year in additional tax revenue. Now when I look at paragraph 3.15 of the current NEO report that we're looking at, there's a quote that says HMRC estimated in February 2024 that income tax self-assessment customers will face transitional costs of around 561 million and a net increase in ongoing annual costs of around 196 million pounds for those businesses mandated to use Making Tax Digital for income tax self-assessment. Okay. Why is Making Tax Digital increasing the burdens on self-assessment taxpayers?
So I think the key driver for Making Tax Digital and the key benefit that we score in our business case is reduction in non-compliance. So this really is about getting small businesses to be more compliant by requiring them to use software, sort of business accounting software, to keep their records up to date and to make more accurate filings to HMRC. For those businesses that currently do not use that business accounting software, there is a cost. For the self-assessment programme, the last estimate was about £110 per business annually. It will be the ongoing cost of that. Obviously, for those who already use those kinds of software, it'll be less. For those who are, who don't keep records now at all and who are going to be obliged to keep them in the future, the costs will be more. We can debate what the right level of cost is to expect from a business to comply, but that is the key driver for that. What we have seen from the experience with VAT, however, is, and we published our evaluation of that on the 27th of February, is significant benefits for businesses outside the tax system. So VAT payers who have moved to business accounting software for the purposes of MTD have reported that they see other benefits to their own business. We don't quantify that and score that as a benefit in our business case, but I think promoting the digitalisation of small businesses will promote sort of productivity of small businesses as well as help tax compliance, which is what we score.
I'll give you another quote from the PAC report from 2023. However, HMRC, this is continuing from the quote that I gave you earlier on, however, HMRC has lost sight of the need to put customers at the heart of its changes to the tax system. The programme, Making Tax Digital, was originally expected to reduce the overall burden on customers, but will now impose significant additional burdens and costs on customers at a time when many can least afford it. Do you think we've sort of learned the appropriate lessons from that quote from a couple of years ago? Do you think we are being aware more of where customers sit in the heart of the system?
I think, I think MTD delivery has changed over time, and we learned more and more about the costs and benefits of it over time. There is no doubt, if you look at the first phase, which has been complete, it has definitely delivered benefits. So in terms of tax compliance, £4 billion of additional tax revenues up to 2930. And those reported benefits that customers have told us about, which we've included in our evaluation. But when we look at the costs to business, over 5 years, so there's a one-off transitional cost of that phase of about £249 million, and then over 5 years a sort of ongoing running cost of £544 million, and that is something that we're continually reassessing and reevaluating and learning from. So I wouldn't say that we've lost sight of the needs of customers at all, but we need to keep focused on what we're trying to achieve here, which is making tax compliance easier. But I'm afraid for a significant number of these taxpayers, they were not complying in the first place, so there is an added burden on them because we're now requiring them to comply.
And I'm very supportive of what you're saying from customers who are non-compliant, but the customers who are complying, who are then seeing additional burden, are you getting the balance right in that we're not overly penalising compliant customers by approaching this from the acceptable burdens from those who are not compliant?
Yeah, I mean, I think that's a valid question, and it was a sort of choice that had to be made. There are a number of different ways you could have approached this. The approach that we have adopted and successive governments have adopted is one of a sort of universal sort of drive to encourage small businesses to improve their record keeping and to improve their use of software. Obviously, for some who are already doing that, the burden really here is low to zero, because they already had they're already using the best possible methods. But for others, definitely there'll be improvement. I mean, I have, in the early days of MTD, did sit down, I remember, with an agent whose client had sort of perfect copperplate handwritten business records, and the question did arise, do we really need to require those people to change the way they keep their records? But I think we are asking small businesses to keep up with the modern world here, and I think they will see benefits themselves from that.
A final question, just expanding on that. I think you're absolutely right that Making Tax Digital was bringing things into the modern world, but it's a journey that started 10 years ago, but it's getting a turbo boost now with digital and AI, and we've already covered that. But being digital is going to be more encompassing as we go forward. So I wonder what lessons you think HMRC should learn from the last 10 years of Making Tax Digital as we start this next phase of that all-encompassing digital journey.
I think when we've completed the current phase of MTD, we will have virtually every business in the UK using business accounting software that speaks directly to our systems, and that is a base from which we can exploit further. So I think we need to look at the functionality that is in that software that helps businesses. For example, can we build into it things that guide them and support them better than those currently do? But also, can you build other things on it that help businesses? The government is about to consult on e-invoicing, for example. Now that we've got all businesses through MTD using business accounting software, that is, I would hazard functionality that you could relatively easily add onto that base. So I think there are certainly lessons for the future in terms of having secured this improvement in the way businesses keep their records. How can we then leverage that, not just for tax compliance, but to help businesses with their productivity as well.
Final point on that, the ease of compliance, the ease of doing business, the way that digital can make life easier for HMRC. There is a human element to digital. Not everybody reacts with digital in the same way. Mm-hmm. There is a sort of psychological approach to it. Some people are very happy in a digital world. Some people don't like it at all, and there's a lot of anxiety with dealing with it. Are you going to ensure that as we embrace the opportunities of technology, the vision for that won't just be driven by the designers of the software, it will also be influenced by the users of the system, and that you will make sure that all level of happiness and all level of interaction with digital will be heard when you're designing the systems?
I think 2 points on that. I mean, first of all, yes, it was our experience when we were introducing Making Tax Digital for VAT that there was a lot of apprehensiveness and anxiety about the need to make the change to the new software, whereas what our evaluation that we published last week shows is that a lot of businesses that have now made that change report that they feel more confident that they're getting their tax right, and that they're finding that easier to do, and that they've found migrating to the new software easier than they had anticipated. When it comes to the quality of the software, this is a private market, so HMRC does not provide this software. What we do is oblige businesses to use that software. There's a whole variety of products out there on the market that they can use. I think one learning from our evaluation that we published is those businesses that have opted for the slightly more expensive, higher functioning software have seen better benefits than those who have gone for the most basic product. So I think helping businesses to make the right choice, which is something that government can do, but also a large 71%, I think, of all these businesses use a tax agent. The tax agent is a key intermediary who can help them make the right choices. But it is for the market to meet the users' needs. And when we have a competitive market, hopefully that's what we'll see.
We'll just leave you with a comment. I almost agree with that. It is also your responsibility at HMRC to help customers to have a good experience. And so it's heartening to hear that a lot of your businesses are finding the journey acceptable, but the marginalised ones are the ones that we've also got to make sure their voice is heard. And absolutely it's for the market, but I'd also argue it's for you too to engage with that marginalised element and ensure that you're doing all you can to make their lives a little less anxious as they're interfacing with HMRC.
So, as I could only get you to almost agree with me, I'm going to let Lucy...
I think we do agree with that point, and the point I wanted to add is we also have a number of forums where we actively reach out to those in the voluntary sector who represent, I think, some of the customers that you're talking about, to hear their voices, because I think we really recognise that there are customers that will have different emotional and different experiences of our journey to digital, and we bring those voices into our programmes and into our ongoing thoughts about digital services. So we have forums to listen to those voices.
That will certainly help trust. If you get that right, that will help impact the trust issues that we were talking about earlier. Thank you, Chair.
I do entirely agree with Chris Kane. So Jim, you did mention something which I was going to ask at the end, and this is this consultation on e-invoicing. It's something that's used in the commercial sector, as it's laid out in paragraph 3.12 on page 45. It's used in other countries. Could you just sort of tell us very briefly what it is you're consulting on exactly and what benefits you expect it to bring, so taxpayers can know what they're likely to be facing?
Yes, so it will be a joint consultation between HMRC and Department for Business and Trade, so it's not just about the tax system, but Lucy.
Yeah, so we're consulting on a couple of things, just introducing the concept to businesses, and actually I think it's a really good example of a consultation where we're asking businesses and customers, what are their views, what are the kind of costs and benefit from it. We're also consulting specifically on the kind of model, and there's a preference from the government for a decentralised model, but you could also have a model where actually some of the information has to be fed through back into HMRC, a centralised model. So it's an interesting example, I think, in light of this kind of costs of the tax system, where actually we're actively consulting on some choices over where some of those administrations can take place. And then finally, the consultation also talks about whether there's also further benefits from more real-time information and what more we can do about that, and ask some open questions about that.
Yeah, I think that there are probably lessons to learn from Chris Kane's line of questioning on making tax digital. I felt really that it was all rather imposed on business without too much consultation and without actually them knowing what the administrative cost was going to be. So if we're going to introduce further changes in this area, what you're doing sounds as though not only the type of system, but actually the compliance cost of doing it will be, for most businesses, would be really helpful, I think.
Yeah, and I think actually if you read the consultation, it's incredibly good and in terms of detailed questions, asking businesses to talk us through their experiences, their views on the pros and cons and what different models might make. So I think that would be really helpful to this conversation.
Thank you very much. Clive Betts.
Yes, just a brief follow-up on the question of the software packages that are available to businesses. Are you in any way concerned about the security challenges that some of those could potentially pose?
So, I mean, obviously, what we do is we publish on gov.uk a list of all of the commercially available software that is MTD compatible. In other words, we'll file something to HMRC that meets our needs, but it is an open market. They don't particularly pose security risks to HMRC because they are software in that the business uses. They're not software that we use, but we do set some requirements that the software must meet in order for us to list it as a product. And I think what we do keep under review is we are conscious that we have, if you like, delivered a captive market to these software providers, and we want to make sure that they, like any other intermediary in the tax system, add value from our point of view and from our taxpayers' point of view. So we do, see that we have a duty of care, but I'm not aware specifically of security concerns.
Have you done any probing into whether they could pose concerns? I'm just, there's some very clever players out there now, and if they've got a package here with software that interacts with your software.
If you don't mind, I will go back and ask the programme perhaps to write, and we can write to you on that, because I don't have information.
No, okay, that's fine. Let's go on to something called the failure demand, which a phrase I hadn't heard till we came to this session today. I understand that includes customers who are calling you because they haven't had an answer in time, customers who've not understood something that they should be doing and call for advice and information, or customers that call you when they might be better able to do something online but don't understand how to do it or are uncomfortable about doing it. So have you got a cost of failure demand, its main causes, and what you can do to actually reduce it in the coming 2 or 3 years?
Yes, so I think there are two slightly different metrics that we use here. I mean, one, as you mentioned, is failure demand, and that is contact demand to HMRC caused by either an error that the customer has made or an error that we have made or a perceived delay on our part, which could be real or could be actually we're within our service standards, but our customers have a higher expectation. The other metric that we use is avoidable contact, and that is where a customer rings us or writes to us in relation to something where we believe there is a good online service that they could have used instead. So both of those drive a cost on HMRC and a cost on the customer as well, and they are the opportunity, I think, that I mentioned earlier to make savings. We reckon that about 2/3 of the calls that we receive are avoidable, in the sense that the customer could have carried out the transaction they want to carry out or found out the information they want without having to contact us. So the cost of servicing that is available to make savings on if we can divert that, deflect that cost, that contact away from the less desirable channel to the online channel.
How far is the onus on you to actually deal with that problem rather than somebody saying, the customer could have done it better?
Well, absolutely. I mean, it's our job to make the digital services as good as we can possibly make them, to make sure our customers are aware of them and to encourage them to use them. We have done some research which shows that about 86% of our customers say they would be happy to deal with us digitally, but a number of things cause that to drop off very rapidly. So if the customer feels the matter is too complex, then they are much less inclined to deal with us digitally. If they are concerned about whether they are going to get it right, they are much less likely to deal with us digitally. So we have to build in reassurance into the design of our products to make sure that they stay in that channel. Also, there's a bit of resistance to, people are happy to look at things online, but when it comes to, I'd like your debit card number or your bank account number, they are understandably worried about security. So those are we understand that those are the factors that we need to work on to drive down this avoidable contact.
And are there any ways in which you are not using electronic communications, digital systems, where you could be in the future?
Yeah, so one of the frustrations for me is when actually it's an action on our part that drives the customer out of the digital channel into another one. And a key thing is we send out a lot of paper outputs. To some extent that is driven by legislation. To some extent it is driven by us not having signed up our customers to the available services. So for example, if you take your pay-as-you-earn code, a lot of people like myself now just get that electronically, but we still send out millions of paper copies. And when we do that, there's, I think, an inclination for the customer to ring or write rather than go into the digital channel. So yes, there are things that we need to do to drive down those kinds of contacts as well.
And some you say is driven by legislation. You can tell us now. I mean, I know legislation and policy is not within your remit, but as your retirement gift to ministers, could you actually suggest some changes to legislation that might improve this?
Absolutely. I mean, as you would expect, ministers are absolutely on this. And I said some of it is driven by legislation, but some of it is driven by our own processes as well. So we need to improve in all of those.
So there is legislation that needs changing.
Yeah, I think so. If we want to go to a wholly electronic way of communicating with our customers, I am sure that some legislation will require change.
Thank you very much, Clive. So Jim, can I take you to paragraph 3.24 on page 48, and this is all to do with regime ownership model. I don't mind whether you answer this or one of your colleagues answers it. Basically, the regime ownership model, where the first time there will be a data-driven end-to-end individual tax regimes, and ask you basically what benefits this new model could bring.
Yes, so we are organised around activities, specifically providing services and managing compliance, but through that we deliver a significant number of taxes, and being able to see things through the tax lens. So this tax drives this cost or this level of non-compliance, and therefore make changes at that regime level is important. And we, in particular, have piloted with VAT an end-to-end regime model where my VAT regime owner is expected to have a dashboard that monitors how the VAT system is working, what costs it is driving in customer contact or in non-compliance, what design solutions could be made either in the legislation or in our processes and systems to drive down those costs and drive up customer satisfaction and accuracy. That is something that we're increasingly concentrating on. We did start with VAT, but we're now applying that across the regimes. We also count as regimes, if you like, in this context, cross-cutting sort of value stages, like, for example, registration. Each tax has its own legislation requiring people to register, and they're all slightly different, but actually managing registration across them all and making sure that that is secure and promotes good compliance is an example of how we're using regime ownership.
Really helpful. So will you task regime owners with reducing the cost and time taxpayers spend dealing with the end-to-end system?
Yes, I mean that would be I would expect every regime owner to understand how difficult and costly customers find it to interact with their regime. We would then prioritise which regimes we want to focus on. So I may not require every regime owner to do that, because we may decide it's best to invest in certain ones. But yes, the aim is that when it comes to customer costs and HMRC costs, that each regime owner understands what those are and what drives them and what interventions could make them different.
Thank you very much. Now, I'm sort of caveating myself before I answer this question, because this committee is not to become a vehicle whereby we take up individual tax cases, far from it. But we have received some evidence from an organisation called VAT Solutions, which we've actually agreed to publish today, and it's now been published, I think. And they raise a number of issues regarding VAT, which you may or may not wish to answer now, but I think we would like to have a little note as to whether these are generic problems or whether it's just VAT Solutions experience. I don't know. If I just sort of list them all very briefly, the compliance checks commencing last year, August, September, responses given in September and October last year. Sorry, the compliance checks were made in 23. Responses given by taxpayers in September 24 and October 24 and November 24 still not answer, and they say that's not unusual. Of course, repayments of VAT are not made until checks are completed, so all these checks tend to delay VAT repayments, and of course that has an effect on cash flow. They say that VAT, the HMRC have misled payments. One recent instance was £500,000 not traced for a full month. They're saying problems with computer systems must all be also be recognised in the last 6 weeks alone we've had 2 clients who submitted VAT returns by the due date but for which HMRC did not take payment of the VAT due. Now, as I say, I don't want to become a one-person tax investor or holding you to account, but whether you recognise any of those problems, whether you want to write to us, whether you've got any sort of an answer now, would be helpful.
So I think it's best that we look into those specific examples and write to you. I mean, I will just make a general comment about VAT repayments. So the way VAT is designed, there's a very high level of repayments in it. That obviously poses a significant fraud risk, and we are targeted by fraudsters. Therefore, every VAT repayment is risk assessed. And if we have concerns, we will generally check before we make the repayment. We obviously try to target those checks as tightly as we possibly can so that compliant taxpayers are not caught up in them, but it's inevitable that some will be. But I think, I don't recognise that we've got any problems with our VAT systems. We do know, obviously, that when it comes to posting payments, we've got some routes that really ensure that your payment gets posted to the right liability, but often people will use other methods of payment, which mean that we do have to intervene clerically to allocate it to the right liability. So I think, Chair, I will write to you in detail.
Really helpful. As I say, we will publish it, but we can let you have a copy of it. I think, unless everybody has any more questions, that we probably are done. So again, Sir Jim, can I thank you very much for all your forbearance with this committee over the years. We will miss you. We wish your successor, who we look forward to meeting, John Paul Marks, in the relatively near future. And can I thank your colleagues also for coming today. So an uncorrected transcript of this hearing will be published on the committee's website in the coming days, and the committee will consider all the quite wide range of evidence you provided with us today, and will be producing a report with recommendations in due course.